So, an interesting day. It did not unfold the way I thought it would unfold.
It was well, I guess the way to term it, we ended up in the same place we started.
Yep.
Six,
Okay.
you know,
And
six.
you actually called that. You did call that.
We, I guess, yeah. We'll just go over to the blogs, give everybody a heads up on where to find everything. Probably a good thing to just discuss like where we were looking at today. So, Shooting Star in the SPY yesterday, which is this candle here. On double normal volume, higher open this morning, and I wrote this around 6:45 a.m. So the higher opening that we were looking at, a short sale, looking for a test of last Friday's low as the first target, which essentially is that day right there. Actually, I could zoom that out a little bit so you can see it a little better. So that's the price action end of last Friday. I am hearing, and I'm sure you're hearing the same thing too. And it's become a repetitive theme in the meetings in the morning, Maren, especially the 8:30 meeting, not so much the 8 o'clock meeting, pre-market, not so much the normal trading hours, of traders who are frustrated right now, for lack of a better way of putting it.
Yeah, that is true. More so than
What
most
is
of
what
the
is
time.
your response to that? Because I have a pretty hard response to that.
Well, my response usually is, you know what, you have to be patient. We've gotten some really great trading days. Don't mess up and give back your money because you're dying to have a trade. One of the reasons they're messing up, if everybody's honest, is most of it is lack of patience. I've got to do something today. And I think that's the number one reason in this kind of market that people lose money. They're not waiting for their signal. They're
Uh,
looking everything. If they can't find it on the 5 minute, they're going down to the 3 minute. If they can't find it in the 3 minute, they're going down to the 1 minute.
I agree, and actually, I want to take that a step further. I think that you had mentioned in this market. Um, I think this market brings it out like it shines a brighter light on it. But I think that you need to have that patience all the time. And I
Right, but you know what? You're 100% right. The thing is, this magnifies impatience, this market.
right, because and again, I'll keep bringing it up, and I think this is the most valuable part of the morning meetings. For the newer traders in there, especially, um, maybe not so much for the experienced traders because they understand it. We make a big deal about determining whether or not a trade is a great idea because you had just mentioned dropping down time frames, and you can basically look at anything and all of a sudden go from 10 minute down to 1 minute where we're trying to find something to do. But none of this matters. It doesn't matter if you're on the 1 minute, the 5 minute. None of this matters if it doesn't make sense here first. And
True.
that's the problem that a lot of traders are having.
Right. Yep. Well put.
They're trying to find entries and tweak entries and drop down and move up and you know whatever point it gets to. But if the higher time frames and specifically the daily charts in this particular instance, if they're not pointing to a definitive edge, and let's even take that even a step further, if you can't recognize that it's not and I'm getting loud because I'm getting pumped up. if
I
you
know.
can't
Stop
you know,
screaming at me.
if you can't recognize that there's a lack of clarity, that means you don't have an edge in the first place because you need to know what it's supposed to look like so you understand what it looks like when it's not there.
Right. You have to know what you're looking for first.
Right, exactly. And I've been there. I get it. I understand if you're trading for a living. I don't want to downplay the urgency, and I know that we both don't want to do. We don't want to downplay the fact that some people literally need to, they're taking their money out of the market and they need to make money. However, you need to make money on a month-to-month basis, not on a day-by-day basis. And we cannot stress that enough because we talk about last week was a lot of good opportunities, but it wasn't like there was stuff to do all day, every day. There were good trades that lined up that did what they were supposed to do. Some days, you can close your eyes and pick a good idea, but we're in a tape right now where you need to be picky, and you are better off trading less share size. If it actually, I can't even take that back. You're better off not even trading because I joke around all the time. Trading less share size doesn't make it a better trade. It just makes it less shares. Um, You're better off not trading if you don't feel like your edge is present and just sitting on your hands, even if you have to do it for an entire day, because you always want to risk money on your best ideas.
Correct.
And look, again, we're not downplaying that that's easy to do, but when you look at your P&L, when you look at your profit and loss, and you realize how much money was bled from your account because of boredom, it doesn't take Superman or Superwoman discipline anymore to be patient, because you realize that's why you're not getting paid what you believe in your mind you're worth as a trader. So,
and now you can think of this. You have to now work twice as hard to get back to that spot that you were at if you had just sat on your hands or gone out for a coffee.
Yep. And look, we're not saying not to do anything. We are saying to be really picky in this tape right now, because that's what the tape is offering. And again, just look at this chart of the spiders. You know, around this time of the day, you're like, wow, this is an unbelievable morning. But then you got to look down here in this lower right-hand corner, and 95 million shares for the day. So let's just, you know, from technical analysis 101, however you want to word it, 2 big down days. Now, again, this was the FOMC day, but it closed on the lows, reversed hard to the downside, and then we followed with a gap down, some trading activity that ultimately closed on the low with some good volume again. Almost 450 million shares in 2 days, maybe even more than that. Let's actually give the definite number: 275 and so almost 500 million in 2 days on 2 big down days. And now we have an inside day on 1/5 of the volume for the last 2 days.
Yeah.
So if that's a trading lesson, how do we turn that into a trading expectation for how to trade? Because we talk a lot about what is the expectation for follow through on a trade. So in other words, if you want to be long, you want to be short, you're setting up probabilities and you're accepting risk in exchange for what you believe are the odds for your stock going down to a level or up to a level based on this picture. Now, if you're just dropping down, and again, we mentioned that a lot this morning, if you're only going off of what's going on right now because this is not here, you're not going to have the same conviction level as you would if this bigger picture is unfolding, which is why, again, we'll go back to the pre-market call here. A higher open this morning is a short sale looking for a test of last Friday's high. Last Friday's low is the first target, but then we give it a little more detail of why. Okay? Stock market got hammered on big volume for a day and a half after the FOMC amounts. A lot to talk about. What uncertainty? If you look at the charts, we got pounded on giant volume and now an inside day on very light volume again. There's a lot of people hoping the market goes higher. There's a lot of people who are in bad trades that didn't get out hoping the market got higher. Like, you know, actually we had a conversation today about somebody whose gut told them Tesla was going higher. And, you know, we saw what happened in that today. You have to trade what you see on the charts. And it's a long held cliche, you know, see what you trade and, you know, however you ultimately want to word it. But it's a cliche because it's the truth. You know, we joke around during the day, you know, I want to be short these stocks, but if they're going up, I'll be a buyer. You have to get to that point.
Right.
You know, so if you're struggling and if you're getting bounced around like a pinball machine right now, there's tough love, and I'm going to throw it out there. It simply means that you're not being picky enough. Now, or maybe your strategy needs some work. Maybe you need to be a little bit more definitive. Now, is that implying that if you have a strategy and you're picky, you're not going to lose trades? No, that's not what that's implying at all. But you will minimize, at the very least, reduce the mistakes that you shouldn't be making that take money out of your account. That's the point.
Right.
So here's the map that we were looking at the end of Friday in the afternoon. A lot of stuff. Actually, that can't be right. The market got closed week on Friday. That is absolutely not the right map. I'm looking at it now. I'm like, what did I do there? That's absolutely not the right map. The market closed week on Friday, so that's not the right map. I apologize for that. But I do have the right chart of the market. This is actually what happened on Friday afternoon. So majority of stocks actually held their bid a little bit, and this actually looked like we were going to get a post-FOMC rally after we sold off, but the market quickly ended up trending down from the last 4 hours of the day. So that's what actually we were looking at coming into this morning. So shooting star candlestick on double normal volume. Shooting star essentially means this. Okay, the opposite of what a hammer is. So it looks like there's a big tail and the meat of the on the bottom. So a couple of things happened there: gap down, followed through, closed on the lows, and bigger volume. All right. So we were looking at a higher opening this morning, and a higher opening in what I perceive to be a bearish tape should have been a short sale, and looking for a test of last Friday's lows. So if we go to the chart, this is actually last Friday's lows. We came within 25 cents of the lows, and then we just kind of danced around in the afternoon. When we started to sell off here, Marion, and we retested the opening price here, what was your perspective at that point, which was right around noon, let's call it?
Right. I actually was waiting to see the break there, but we never did break below the level. So it wasn't short, so I was still waiting.
Okay, so we kind of held out there. We actually finally did push through there, and we had basically every hour was a different trade here, which that you can definitely be driven a little crazy about. However, now we have an inside day on light volume. What are you looking at tomorrow?
You know what? I think in this market, it's all price action. We could go either way. I actually did not think we were going to do what we did today. I did not think we'd close up here. I thought when we started going lower, I was waiting to see if we could get a confirmation of a much lower price, and we got that nice red bar, but quickly it opened up the next 10 minutes higher, and so it wasn't. So we never got the confirmation of going lower. But there wasn't real buyers in it. Institutionals weren't there. I think we're going down tomorrow. At some point, are these people going to keep buying if institutionals aren't involved?
It's very hard to justify. I'll tell you that.
I don't see buying. I mean, you know what? For whatever, what's that called that you have to, make sure everybody knows exactly what you were doing. The truth in advertising.
Oh.
Full disclosure. I was only long today. Even though I came in with a short on the brain, I was only long because the stocks I liked actually gave great signals. I was holding one overnight that I've been holding for a while. And there was no reason to get out, and it remained strong all day.
Well, we can actually get into that. We'll talk about that because Facebook is the stock that you're talking about there. But
right.
We did have a pre-market call. There were a few stocks that we like that was still solid longs, but obviously the size of the short sale list was much bigger. But I want, if you don't mind, Mary, I just want to take 1 second. You just you just said that if institutions aren't involved, how
right.
would somebody listening to this right now at least have an idea of what that means?
Okay, what it is the big volume, the big money is the institutionals. Nobody cares about us trading. We're not going to make any difference in the volume. You want them to get aboard to help the momentum go in the stock. These are going up on such light volume because guess what? So there's not a real strong foundation. As soon as they start falling apart, forget it. You won't even be able to get out. It's going to go down so fast.
So we're looking at price action and volume to recognize whether
right.
they're involved or not.
Yeah.
And is that intraday and day-to-day?
Right. And you know what? It really concerns me is that we got the huge volume on the down days.
Which is why I had such a bearish perspective coming in today. Because look, no matter what we want to see happen, you can't ignore what's going on. Today's opening higher absolutely threw me for a loop this morning. I was expecting open flat and push lower and retest this level down here. But the fact that we opened higher, I'm like, what is going on here? What's going on? But what's going to look interesting tonight is this. It's going to appear like we had this really strong day today.
Right.
With the bulk of the S&P 500, except for a little pocket here, was strong. Or I shouldn't say strong, closed higher than the previous close. So this is deceiving, in my opinion.
Yeah, I definitely agree. Again, it's because of the low volume, so you're not. I wonder what color would be if someone had a heat map that it got lighter in color. The shade of, I don't know how they would do it. Or the bars got bigger and then it would almost like engulf it all if it was really, really low volume, so it would like negate it. It would be kind of a cool heat map to have.
To actually add volume to the color. Yeah, that would be kind of cool.
Yeah.
So that would be a trend heat map.
Yeah, exactly. That's exactly, yeah.
All right, so this is what we were joking around a little bit about when we started at the meeting today. We're essentially, this is the opening price, that's the line across, and here's where we close. So 6.5 hours worth of trading, we kind of end up at, well, not kind of, we actually ended up in the same spot. So we ended up in the same spot, which is called a doji type candle. And we have an inside day, which means that all of today's price action is inside Friday's price action. But by the very definition, an inside candlestick, doesn't matter if it's a 5-minute candlestick or a daily candlestick, an inside candlestick trading at or near the lows, and this is kind of, I guess you could say, in the lower third, on lighter volume should imply follow through of the previous heavier volume price action, which in this case would be to the downside. That being said, you still have to wait to see if tomorrow trades out of today's price action, because if it doesn't, then that would be inside on the daily, which is a really tight consolidation. Okay. Because there's no longer term trend, and again, longer term for day traders, we're specifically talking about what's going on here. We're basically in a box right now. So we have about 10 days worth of trading without a trend. We tried to break out on the FOMC, couldn't, and now we're trading near the bottom. The point that I'm making here, Marion, is your conviction level and your trade expectation for follow-through right now should not be sky high. You should be trading intraday timeframes, maybe one day to the next, which means you're relying heavy on yesterday's high and low, today's opening price, and that most immediate price action.
Right. I actually agree with you.
All right, so looking at some stocks to buy coming into today, we just spent a lot of time saying be specific, there's stuff to do, be specific, and actually following up with something else that we had mentioned in the morning meeting. You don't need all of your stocks to trigger. You need some of them to do exactly what you expect it to. So stocks to buy, bullish ideas, breakouts, and short-term trend of stocks above the 20-period moving average, positive for the last 5 days, and closed 2% higher from the open. You can see we had 1, 2, 3, 4, 5, 6, 7 stocks in all of the chaos that we had that gave some pretty good opportunities from this morning. So let's just take a quick look at those and see why they were in the list and actually how they ended up unfolding for the day. So RCL was the first one. And again, we're focusing mostly on the first part of the day here and why they were in the list. RCL, you can clearly see is taking out, clearly see it's taking out 52-week highs, mostly green candles, which shows institutional support where they're bigger green, not these doji type candles, but actually getting some follow through, getting higher highs and higher lows. And that's a little bit of what we were talking about before, recognizing when institutions are around. Pulled back for a day or two and followed through with some pretty good price action today. So right out of the gate in the first hour and a half of the day, basically 96.30, 97.30, and closed on the highs again. So it sold off with the rest of the market, basically hold the open. But to back up what you had just said before, let's say you didn't get all of this, you're still only looking long. And then in the afternoon, when you get this really clean inside candlestick holding support at the opening price, and you only want to be long because of this in the first place, you get a nice dollar at the end of the day, or pretty close to that.
That's true.
UA. Another one focusing on the fact that it was in the list as a long. And let me zoom that chart out a little bit. You can see why they're a little better. So, again, only looking for longs coming into the day. So here's the first. This is a 10-minute candle. If you trade the first 10-minute breakout here, 102.25, 104.25. Even if you don't take the entire move, you have an inside candle, another inside candle, which actually triggers another long here, but you probably would have got stopped out on that piece. So let's, just for argument's sake, say about $1.50 there. Now, the obvious question comes in. You get a pullback here, you get an entry here, and you get long, and the stock pulls back hard. So you take a loss, take a flat. I mean, that's really what it boils down to. Now, this entire time it's pulling back, you're still only looking for a long because of the higher time frame. Now, if you want to be short, you want to be short a weak stock, not a strong stock. Can't stress that enough. So just covering some of the other stocks that we just had highlighted there that were in the list. Amazon is a very interesting one because now it's starting to flirt with staying above this level, and you can see how big of a gap there is, almost $30 to the next level. Yeah. Nike continues to be strong. Now, the thing about Nike is you have to be aware of the higher time frames, and it's got a lot of resistance up here in the 117 area. So if it opens up into that level, you want to make sure it gets through there. You don't want to bid it into what is a perceived resistance level. Facebook has been one that's been on the list for a while, and you can see here's the open 94 to 94.50 to 96.25. So really solid $2 or so, maybe a little bit less out of the gate. Again, the first 2 hours of the day. But this is not what's important. What's important, and I can't stress this enough, it's a long, and then you only look for longs. That's the key. And if you have that simplistic attitude or mindset, how strategic thought process, whatever you prefer to call it, it sucks all of the confusion out of trading because all of these wiggles and jiggles, none of them matter. In this case, you're only looking for a long. You're only looking for a spot to get long where you can manage the risk that justifies the long idea. And I think that's where a lot of traders are sending me emails and that kind of stuff and messages. They're getting mixed up because they're trading the same stock in both directions. And I'm like, why? You only want to be long the stock.
Right, exactly. Even no matter what it does, even while it was going down.
Yes, and I think a lot of traders have a hard time with that. For some reason, conceptually, I shouldn't say they. We feel the need that it's going down right now. It's not a long right now, so that means I should be short. But that means you're getting cute. That means you want to be long, and then you're going to cover it on the bottom and get long, cover it short, and then you're going to get long again. That is extremely, extremely difficult to do.
And I haven't mastered that yet after all these years.
Yeah. So some more follow through. And again, we emphasize it every day about watching the inside days. There's a decent sized list here. I don't know how many. Let's just say 15 for argument's sake. I have these highlighted because you only need the list, and then you need to just let it unfold during the day so you can take a look and say, okay, the reason I'm watching inside days, the reason which the SPY is today, again, just to throw that out there, you are looking for a trend out of the consolidation. You're not necessarily calling direction. You're calling an expansion in volatility. So we're going to take a look at TERP and MDVN just to give you an idea of why these types of trades are in the list. Okay, so there's TERP. Here's the inside candle. Let me zoom that out a little bit. Here's the inside candle. Now, it just happens to be in the direction of the longer-term trend, but here's the inside candle, and we're looking for an expansion in volatility. And that's the day that you get, again, only a $21.50 stock that gives you $1.50 plus from high to low. Yeah. And the other one is MDVN. And very, very similar. So you consolidate, again, even the same type of thing. We get consolidation intraday, looking for a trend day. We finally close below the open. Again, pretty clear there. 50.25 down to 47.50. Okay, now, is that impressive? Yeah. Absolutely. That's a pretty big move, right, for one particular day. And what was interesting here is a weaker stock actually got a little bit extra juice from the market. But what's more important here is inside day, looking for an expansion in volatility. And when you get continuation patterns, which is a push down and a pause, a push down and that kind of stuff, that's when you start to get these trend type days. So that's why you got to keep an eye on those inside candlesticks. And remember, they're in the blog every single day. They're on the bottom part there. They're pretty easy to find. Right here, inside day. So just go to that list and keep an eye on that. I'm doing all the work for you. All I got to do is go to the blog every day. My post and Marion's post are up every day before 8 o'clock. There's a ton of stuff over there. And then bearish ideas, again, sticking with the theme of the day, Marion. If these stocks are sell shorts, you should only be looking for validation and entries to sell the stock short. So if these stocks rally, which actually I'm pointing to the screen right now with my finger. You can't see it. I have no idea why I'm doing that. Kihu, even though it was in the list, we'll take a look at GPro, Amba, Win, and Baidu. We're going to take a look at Kihu and really drill this point home. Oops, not coming up. What's going on? Ah, there you go. I'm having a lot of technical difficulties today. I must be like really magnetic or something today. So you could see, actually, it was a downtrend and a bear flag looking for it to roll over. So that's why it was in the short sale list. But it traded above the open the entire day. So above the open, a little bit difficult. You could still put a short sale on if you like the longer term picture. But the better trades for short sales are below the open because that means today's order flow is in sync with the longer time frame order flow. So even worst case scenario, you are not getting long, even though the stock went up. You can't look back on the stock and say, oh, gosh, you went from 46 to 47.30 in 20 minutes or a half hour. I really wish I was involved. No, you are only looking for a sell short here. So if we look the other ones that I had highlighted there, and we'll discuss why, that again, that's the big thing. A lot of people are, how do I find a good mentor? Listen to somebody who talks to you about strategy and tactics, not about how much money they made. It's about making you a better trader, not talking about what we did.
Right, and also don't listen to someone who's going to give you the good trades. No, you want them to be able to show you how to find the good trades.
Exactly, that's exactly right. So GPro, again, for the reasons it was in the idea, 20 below the 50, clearly pushing down near lows, good downtrend, bear flag, pushed down a little bit on Friday. So this was Friday, and that's what we're looking at today. Gapped lower and just traded lower the whole day. And again, it's why it's in the list. That's the most important thing. And then Amba, very similar, nice downtrend the entire day. And look, I don't know about you, Mary, but I mean, we've been waving the profit flag on this stock for how long now?
Yeah,
I
exactly.
mean, if you take a look at this chart, I mean, it's been in a downtrend.
Ever since that one really powerful impulse day.
Plenty of opportunity in the stock. This stock should win. WYNN should be in your list every day. Is it perfectly, pushing down and flagging? No, but look at, again, in the list for a reason. That is the most important part. The reason it's in the list. And then last but not least, Baidu. The closer you get to, and again, very similar to what we saw there in the other stock, the closer you get and the harder you work on developing your edge, the easier it will be for you to be patient. Now, again, I didn't say easier to make money. Marion and I are very, very clear. We want to tell everybody the truth, not what we think you want to hear about. Oh, you just watch this one thing and trade. You'll start making $1 million in a week, or just do my one thing. It's not how it works. You need to learn what to do, and the first thing you need to learn as a trader is developing your strategy, which means you believe you found something that happens more often than not. Whether it's on longer time frames, whether it's on multiple time frames, and obviously we use multiple time frames. It should always start with the higher time frame. Whatever, and again, you could even put that in perspective, Aaron, because for some very active traders, the higher time frame could be the hourly chart for them.
Oh, true. Yeah, that's actually a really good point.
There's nothing wrong with that, but you have
Yeah.
to be definitive. Again, just to put it in perspective of what we're going to finish up with here. If you're trading the hourly chart, and let's just say, for argument's sake, here a couple of days ago on the 16th in Baidu, you had 1, 2, 3, 4, 5 out of 6.5 hours that were bullish. The way to be trading that, and I've done this in the past, is you'd just be dropping down to the 1 minute chart, timing entries in the direction of that hour, in the direction of that hour, in the direction of that hour. So to put that in perspective, we're doing the same exact thing, but we're fine-tuning our entries after discovering first on the daily chart and the weekly chart whether or not we want to be long or short. In my experience, those are the time frames that are the most recent, relevant, and you can see clear order flow. And then you drop down to those intraday time frames and look to make trades only in that direction. So again, it's a long road to be a successful trader, but it has to start with strategy. You have to say, I believe I am looking at something every day that I could look at with consistency, that if it happens, I believe something's going to happen more often than not. And when you have that belief, then it's not hard to be patient, because then you worded it very well before, Marion. You said, then that's the only thing you're looking for. And I think that's a really great way to put it. All right, everybody, we are going to call it a meeting. Have an awesome day, and we will speak to you tomorrow.
Okay, I'll talk to you tomorrow morning, Pete.
Bye-bye.
Okay, bye.